So if you go onto the IRS's website and you did not receive stimulus for whatever reason, but you did the first time and you should have this time, but didn't, they have a form that's on there that you can give to your accountant that just pretty much says, hey, I was supposed to receive stimulus, but I need this to reflect as a credit, which in turn will increase how much you're actually going to receive back as a refund if you don't owe the government anything.
Hello, everybody. Welcome back to YVI. It's Roman and Zion here, where we talk about ways, opinions, ways, and strategies to grow your financial selves and your bank accounts. How y'all doing today? Or how you doing? I say y'all.
Chilling. I mean, yeah, we can talk to them kind of, but y'all can't respond to us unless you do it via email or comments. Yeah, all that good stuff. Chilling, bro. How you feeling?
Pretty good. A little snowy up here in the Chi, but doing pretty good.
Yeah, they said it was supposed to be a snowstorm. That was just snow. Like there was no storm attached to that at all. Yeah, so today we are talking about taxes. We're going to do a tax refresher. So what we're going to do is take a couple snippets of videos from when we talked to Brittany Ocasio, a CPA, almost a year ago now. It was a while ago. We're going to take some of those snippets. We're going to splice it into this video, but we want to touch on some of the things that are new in terms of taxes and what we need to do to make sure that taxes are being filed on time. By the time you guys see this video, you should be finishing up the entire tax process, getting things to a CPA or, filing for yourself. But I want to say that the filing date is February 12th.
Yeah, they moved it back now. So normally it starts on January 15th, but now they pushed it back to February 12th. So this will be like a brief overview of the tax system and, how to file and what certain things that are going on right now in our economy that might affect your taxes. So
yeah,
get into them, stupid.
Hopping right in. I think that the first thing that people need to know, you don't necessarily want to be receiving a tax return.
What is a tax return?
This is money that you end up getting back from the government because you've overpaid throughout the year on how much you were supposed to get. So pretty much, when you get a check, there's money deducted for a bunch of random things, for Social Security, for federal taxes, for state taxes, for all of these other things. So what happens is the federal and the state government will end up taking lump sums, or they'll be taking a piece of your check every time, depending on how many things you claim. What are the things that I'm forgetting the name of? Dependents and things. Allowances. There you go.
Dependents and exemptions and everything like that. And really to figure out where you best stand in that is actually read that form where you fill it out, or ask your local tax expert or CPA, and they can, help you with those questions as well.
Yeah. So when we talk to Brittany, and we'll just splice in what she said right here.
A lot of people believe that when you get a refund that's, let's say, over $200, like let's say $5,000, you got a $5,000 refund. A lot of people will feel good about that. In actuality, I don't believe that that's a good thing. It feels good because everybody wants extra money in their pocket, but it's when you look at what actually is going on and the reason why you receive such a big refund, it makes more sense to have not received that refund. So let me break it down a little more. Let's go with the 5,000 example. If you receive a $5,000 refund, that means over the year, you let the government take too much money out of your check. And because you did that, they're like, oh, we took too much money, let's give it back. And that means that you could have had $5,000 divided by 12, which is about $417. You could have $470 per month in your pocket throughout the year. Now, I don't know about you, but for me, I would rather have an extra $400 per month as opposed to receiving some big lump sum once a year. So in my opinion, I don't really like large refunds. If it's higher than $200, I'm like, you let the government hold your money for too long. And on top of that, you let them hold it. You could think of it as like a non-interest bearing account. Like the government held your money. You could have had $5,000 invested in something and could have got at least some type of return from that. And then on the flip side, if you owe money, that technically means that, you know, you didn't give enough money to the government and now you got to pay some of that back. And in that case, it's like, okay, but at least you got to enjoy more money throughout the year. So if I could choose, I would rather one, owe nothing, because technically you're not supposed to owe anything. You're not supposed to receive anything after you submit your taxes. You should be at a solid zero.
But what she was saying was, hey, make sure that you are filling out those W-4 forms correctly, state and federal, just to make sure that they're not taking too much so you get a huge lump sum at the end of the day. That was one of the bigger things for me, just to make sure, hey, everybody's like, yeah, I want a massive tax return, but that just means that they are taking too much throughout the year that could have been in your pocket, that could have allowed you to save more or start investing in those types of things.
Spot on. I think we also should go back and kind of explain kind of what taxes are. I guess a lot of people see them every day, but if you're really new, normally knows like why there are taxes or what's going on with that. So of course, if you don't know, taxes are just a fee or percentage, whatever that goes by the government to pay for public services, that first responders, whatever, anything that's tax paid pretty much. And basically how they figure out how much you pay for your taxes is in your tax bracket, which you can find out just by looking at your gross income and just Googling what the tax brackets are for the year. The IRS website is pretty much one of your best and greatest tools in this aspect. We referenced it a lot in the last video about different tools you can use to figure things out. Also, it's a great way to file your taxes for free that actually won't try to upsell you on other different options. And most people also look, just some like quick tax facts. I know most people most people see your AGI, which is your adjusted gross income, instead of just your gross income, usually how your taxes go. So your AGI is what's adjusted pretty much pre what your usual kind of gross income would be. So if your gross income is 30,000, it'll be like your exemptions, including 401k contributions, student loan interest payments, things like that. So let's say your gross income is what I say 30,000 and your exemptions are 2,000. Now the IRS puts you in a tax bracket of 2,800. So that's one of the ways 28,000. I'm sorry. And one of the ways you basically can end up saving money or taxes in that way. So knowing how to do your deductions, what the standard deduction is and everything like that, which we have talked with Brittany about before, are great ways to kind of stay on top of your taxes.
They should keep a very close track of, again, what kind of income they make. Is it all ordinary income, or are they going to have some capital income or losses? And they should also keep your receipts, keep very good track of, you know, all your deductions that you plan to take, or all your expenses, I should say. And also keep track of your employees, if you have employees. But yeah, that's my biggest thing. You know, whenever I do somebody's tax returns, there's just a certain amount of information that I need. And when people keep good records of, you know, their expenses, their incomes, the types of income, and they have all of their information from like prior returns, that is very, very helpful when it comes to, you know, actually doing your return.
Yeah.
I don't think we brought up last time. Sorry, I'm cutting you off. I don't know if we brought this one up last time, but most people to figure out if they even need to file is on the IRS website, which we'll link below, but it's a tool on there that says, it'll basically tell you put in your social and all that jazz, to figure out even if you need to file at all.
Yeah. We talked about last video or last time, how we have where's my train of thought going? Oh my gosh. I was going somewhere. Going somewhere. Wait.
I cut you off.
Yeah, you did, and now I'm confused. If you have a W-2, you need to file taxes at the end of the day, because there is a good chance that you will get something back. We talked about the need to have a CPA. It's not great if you're only working one job and it's W-2. There's not a great need for you to get a CPA. You can. It's not really hard to file yourself. But for people like Roman and myself, Roman is, he was doing bartending, so he was getting tips. That's something he's going to have to adjust for. Being W-2, being 1099, being self-employed, owning a business, all of these different things factor in. And I'm simply not smart enough to do. I have 4 or 5 W-2s. I have a 1099. We own this company. It's too much. It's too much for me. So if you're in a sticky situation, make sure that you're getting somebody that's qualified to actually look at your taxes, somebody that you trust. I mean, Brittany is my accountant, and she's been a friend of mine for years. It also takes off the pressure of, if you get audited, is it you that's being audited, or is it your accountant that's being audited? Because, personally, I'm not trying to get audited by the IRS because I don't have any answers for them. So if I was to ever get audited, I would send them to Brittany and I'd be like, hey, you can explain all of this. So it takes away some of the liability, even though you will have to pay for it. So I think that's a big thing that people need to know.
And one of the big differences between having like your own personal CPA and going through like Jackson Hewitt, H&R Block, TurboTax, things like that, is that even if you go to a physical location, I know some of them have online services. Not everyone there is a licensed tax preparer. They are hired throughout the company just around tax time of the year to basically get people through. So they're not also always the best experts. A certified CPA is someone who is certified handled. But of course, like if you have a much more kind of simple, just like Zion said, like one W2, nothing really else really going on, you're fine. I think the cap on federal taxes about 30,000 before you really need to file. But if you get a W2, even if it's below that, you probably should. If you're self-employed and you're making above 400, then you're at the limit where you should probably file. And I think when you make it any income at all, $500 or $599 over that, it should always be filed. So basically, if you're earning money, the government wants to know about it so you don't get caught up in anything. So make sure you claim it.
Absolutely. So we can, I think that's some pretty decent overview, but we can link the other 2 videos down below. But new things that you should know about. If you did not get stimulus, like myself and
I didn't get
Roman,
stimulus.
We don't know what happened.
Stimulus.
We both received direct deposits for the first stimulus rollout. And for some reason, they sent hard checks to me and to Roman, but we've both moved. So the IRS apparently did not update their system. So they did not get the new addresses. So they sent them to the old addresses. What that means, you need to give whoever is doing your taxes, you need to make sure that they are adding that as a credit. So if you go onto the IRS's website and you did not receive stimulus for whatever reason, but you did the first time and you should have this time, but didn't, they have a form that's on there that you can give to your accountant that just pretty much says, hey, I was supposed to receive stimulus, but I need this to reflect as a credit, which in turn will increase how much you're actually going to receive back as a refund if you don't owe the government anything. So if you were working 1099 the entire year and you did not receive stimulus, but you also have the $600 credit, it's going to take away from how much you actually do have to pay back the government. We talked about the difference between 1099 and W-2 last time, so I'm not going to really get into that. One's just meaning self-employed and the other is employee. So the main difference is 1099 people will always have to pay the government something at the end of the year. Unless they offset that with W-2 work and they can, the government can deduct more from that. But the $600 stimulus credit will actually be a $600 credit that's added to anybody that's supposed to be paying taxes, or you'll just receive a little bit more by the time you get your tax return.
And of course, whether or not if you just got the first one or the second one already to you, those are not counted as income. You do not have to claim that on your taxes as income for the year. It's already been written off as like a forgivable payment, so you don't have to worry about that, or prepayment, or pre-tax credit, I believe. So you don't have to actually worry about claiming that on your taxes. So that's a great thing. And yeah. If you are worried about your investments, a lot of people have been asking me about their taxes on their like if they sold early or anything like that. There is capital gains tax. If you sell your investments before a year of holding them, you will pay a tax on that. And then you basically just pay taxes on that credit for the federal level and state level. There's taxes on both levels. Know your state credit, your state taxes, and your federal tax levels, and figure out where you fall in there and figure out what deductions are. Sometimes you can offset some of your stock or investment credits with charitable donations or even some of your losses as well. So, like I said, talk to a CPA, talk to a financial advisor, especially if you're getting to like capital gains tax and deductions, even if you're a self-employed gig worker, Uber driver, things like that, because you're a contractor. So writing things off like your mileage and your tools that you buy and your uniform and things like that are things you need to figure out how to do, and having an expert there to walk you through that process would be great. So you can make sure you get the biggest deduction possible and write off everything you can.
That's the same thing true for 401k. So if you're pulling from 401k within the last year, because of whatever was going on, there is going to be taxes for that unless you're repaying that in some type of fashion. So just make sure that you are fully aware. I personally wait until probably the last week of January, which is now. I wait till the last week of January to make sure that I get all of the W-2s, 1099s, all of that stuff in the mail before I file. But then file quickly. File as quickly as you can, because it's the best thing for you. If there are errors, you can catch them quickly, and the government will just reject whatever it is that you do, or you can just fix stuff. So I wouldn't don't push this out too far. Get it done as quickly as possible, and then if you get a refund, you get paid quicker. So that's always a plus. So, and then the other thing we wanted to discuss was, if you owe, you can set up payment plans. You don't feel like you have to pay all of this at one time or as a lump sum. They oftentimes have plans that don't even accrue interest. Last year, I owed somewhere close to $1,000, and I pushed it out through November. No interest through November. Why would I pay $1,000 right up front if I don't have to? I made some payments throughout the year, and I was able to pay the $1,000 without a problem. Not that I couldn't pay it at once, but why? Keep more money in my pocket, get it paid without any interest, and now we're all good. Now we're in the next year, and hopefully I'll get money back this year. So, just another key to success.
The keys to success from Zion there. All right, guys, tax time is a coming. If anyone has any more questions, feel free to reach out to us or end up hitting up your CPA or local tax expert. And
yeah, we're going to link the videos that we did before. We did one which was just an intro to taxes. So if you're confused about any of the forms, the documents, where to go, how to do anything, check out that video, which will be linked below, as well as we did a video with Brittany Ocasio, the CPA. She went more in depth with everything that we did not know how to do ourselves. So this was just an overview of all of those things. Get your taxes done as quickly as possible, making sure that you're getting the right numbers in, making sure that you're doing it correctly or getting it to somebody that knows how to do it correctly will all behoove you at the end of the day. All right. I think that's going to wrap it up for us here today. As always, we appreciate you guys. Like, share, subscribe, send us messages, hit us up. We got a bunch of stuff in the works. So be patient with us. We're trying to get as much content out as we can. But we busy, but we coming with more stuff. Anything else, my guy?
No, I think that's it.
All right. As always, y'all know what's up. We may be young and we may even be broke, but we are always investing. Till next time, guys. Peace.
Hey everybody, thank you for listening to Young Broke and Investing. We just want to let you know that these are the opinions of the hosts, are not meant to be the basis of any security purchases or investments. We're trying to give a little information out there for everybody, and have fun and be safe.